May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the Euro USD, the Euro USD, Euro USD. Now, what we have here is a lower low, a lower high. Then we have a new lower low here. And this is a new lower high. Now, you can use this. You can use this, but you can't use this. That's not a lower low. Got it? It didn't break structure here. This is a structure break. Bearish. This is the manipulation leg. Okay, got it. All right. This was the swing low. This was the new swing high. Not this. This is another lower low because it made this is another lower high because it made a lower low. Got it. And then we have this. All right. And this has been holding to this bearish trend line. Not that I use trend lines for trading. I just use trend line to mark structure. But this is the potential lower high that could lead to the next potential lower low. I'm looking for the new impulse down. This was an impulsive move up. Yes. All right. And I'm looking for the correction of that or the new lower high. Either way, it's going in the same direction of what I'm looking for. I want to point out something here. You see how this made an impulsive move up? We got the small pullback, and then we have a higher high being made. All right. This was the last impulsive move. All right. This was the manipulation leg. All right. Yeah, we pulled down. I marked that here as a CISD. 3 down closed candles that overtook that strong bullish candle here. All right. We have a weak attempt to make a new high here. And then price comes on down, breaking that low. For sure, this, for me, was a CISD, this move here, all right? And which means it's an order block. Stretch that all the way over. What do we get? Got to mighty show. We see how the market came directly to it, almost to the pip, and started down. Now, are we going to see the market pick it back up and maybe continue up higher? Because this was a nice impulsive move, but so was this, right? And then it pulled back, and then it pulled up. Then we see this action. Okay, so I'm looking at that same kind of action over here. This took many months. We're about halfway through this this amount of months over here, maybe a little bit more. All right, it's about 6 months, 7 months, and I'm looking for price to continue down. I'm actually looking for that downward action, but we haven't seen that yet. We haven't seen a CISD created. When will it be created? I say when it breaks this. Doggone it, man! I didn't mean to make that long. Let's try it again. I'm looking for it to make this move right here. All right, that's good enough. All right, once it breaks that, once we get a close below it like this candle did here, I'm looking for price to come back up and come on down, come on home. All right, we'll see. Well, that's way ahead of things. All right. So what I am actually looking for here is some kind of indication that price is heading down or up. Now, if we go to the weekly, what do we see? It starts to get, the picture starts to get a little clearer that what we have here is consolidation, all right? But a closer inspection, upon closer inspection, all right, you can see we have 2 down closed candles here, 2 up closed candles here that were overtaken by this large bearish candle. It took out the open of the lowest candle, all right, the lowest bullish candle here, and I liked to see that. And if you remember in the last video, I was looking for price to push up, maybe go into this second candle, and then start to farm down. But that's not what happened. It kept going up. All right, now we see a little pullback here. It did not take over the high of the previous weekly candle, but this was like a 90% pullback. So what do we gain from that? What kind of information can we glean? Only thing we can say is price in this consolidation moved back into the consolidation. I thought we was on our way out. No, it pulled it back in. All right. If we go down to the weekly, To the daily, sorry. All right, if we go down to the daily, we got something to watch out for. Now, we've been making what? Lower low, lower high, lower low, lower high, lower low, lower high. And what is this? It's the same thing as what happened over here. Let me show you what I mean. What I'm looking at is the market is making these lows, lower lows. All right. The market made these lower highs. Those are lower highs, I'm sorry. And the market made these lower lows. Except here. That makes anybody nervous. But what we can see is that there was an impulsive move down, just like over here, an impulsive move down, a correction to that move, a lower high that did not take over the high of the original move, the original impulsive move down. This is a lower high compared to the original impulsive move down. This was supposed to make a lower low. It did not, just like over here. It did not. We see a pullback, an intermediate swing low was created, and a pullback, and then we break structure to the downside. Can that happen here? Did not make the full move down, did not take out that protected low. We pull back. Can this lead to another impulsive move down to break structure? I think it can. I think these indecisive candles, Thursday and Friday, may give us some clues to that, because there's no willingness, no obvious willingness to head towards these highs. And I gave a warning on that in my last video last week. All right, now I want you to also see that there was a bearish fair value gap here. Price did not respect that bearish fair value gap. All right, it went up, snatched up liquidity here, and we didn't go any further. It took out liquidity. It offered fair value. It did not offer fair value here. It just went past it, and we went up higher to take out liquidity. If the price is only doing two things, seeking liquidity or offering fair value. It did not offer fair value. It sought liquidity. Once it seeks liquidity, what are we going back for? Fair value. Where's the next fair value? Where's the next area of fair value? We do not have a fair value gap for a price to go back to. So what does that mean? We'll probably be going to seek liquidity. And this is a liquidity low, just like this one is. You understand? It did not. It's a weak low because it did not create a new high. Not yet anyway. This one was a weak low. It failed to make a new high, and price came back and liquidated it. I'm thinking that we may be up for the same kind of price action over here. If we go down to the final one I'm going to go to, the final time frame, we can see the disrespected fair value gap that actually became inverted. Price got above it, came back into it, and then went higher from it. That's an inverted fair value gap. All right, and we did what? Sought liquidity right there. All right, just like I pointed out in the previous time frame. The problem is what we're going to watch is this swing high, that swing high, that intermediate swing high. It's intermediate because there is the swing high. Here is the swing low. We are playing within this range of price. All right, boom, boom. I'm looking for this. I'm looking for that break of market structure. And we don't have anything that says we're going down. What would say we are going down is if price goes past this point right there. And where is this at? This is at 1.1553, 1555, sorry, 1555. All right. And if we go past 1.1613, all right, this is the high mark, this is the low mark. If we see if we see the market go past and close and trade above this high, we are heading towards this high. We are heading towards that high. And if we make a new higher high, game changes. if we that is a positive break. If we see price trading above this high, it's going to end up going to this high. And once we do that, this is a market structure break. Now turn everything bullish, and I'll be looking for buys in the Euro USD. Period. End of story. All right. If we come down and take out this low, then I'm going to see the continuation of this bearish channel. That's all. That's it. And that makes more sense to me. All right. Until the market changes, it gives us a change in the state of delivery. All right. I'm looking for the market to give us a breakout up or down. And I am leaning more towards bearishness until we start to see highs taken out. This one is a confirmation, a validation of a bullish market structure break. All right. Here's where the sign is. If it gets up here, if it trades up here to take liquidity, we just took this liquidity low here. Comes up here for liquidity, that's fine. But if we trade through these highs, we're going up. You understand? This is our alarm. This is the indication that we are going up higher. All right, and I would be looking at this as demand for price to come back into, and then we can start to move higher from. Right now, we are in the middle, and we have to wait for indication from the markets. So you have my analysis. You have which way I'm leaning, but we're going to go with what the market gives us. That makes sense? Cool. Because we have these liquidity points down here, man. We have liquidity points down here, and here, all the way down to here. I would look. This would be an easier because this goes with the trend. This would be an easier look. If we start coming back up here, hey man, we got to change with it. Okay, I'll see you in the next video, man. I already put out one already for the US dollar. Can I get to it? Yes, you can. Right here, the US dollar. Go check that out. All right. And I will see you in the next video. Thank you for watching. Make sure you leave a like or a boost, and may profits be upon you.